Welcome to Momentum Monday. Today is October 22nd, 2023. Howard, are you following the markets lately?
Yeah, I mean, I'm back at my desk, or I'm just for. How are you, buddy? It was a brutal week. Brutal week. Catch us up.
Yeah, definitely the number of distribution days is accelerating. Just look at the big red bars in the past week. Definitely, there's a lot of selling going on in the market. It's kind of we're in a correction, obviously. Ever since August, the markets continue to make lower highs and now lower lows. And this is across the board. Even the Nasdaq 100 is starting to feel a little bit of pressure, obviously still above a rising 200 days. So still in an uptrend, mostly because of 10 or so large cap tech stocks that are holding the rest. But if we look at some of the indices that and capture a bigger number of stocks like Russell 2000, you can see that they're basically at multi-year low.
Yeah, a lot of that has to do with interest rates and
yeah, a lot of the bank stocks.
unprofitable businesses in the small. If you're unprofitable right now, I say this at every level, like you're walking dead. You know, cost of capital is the highest it's been in 20 years after people were drunk on it being the lowest of all time. And then you have the cost of getting a new customer has increased dramatically because employee costs going up, and just the pipes from these big companies that have led the NASDAQ have figured out how to charge proportionally for a customer. So those two factors crush small caps, and then the large caps have cash to invest at 7%, 6%. So they're getting a double benefit. They've got the cash on their balance sheet, earning money, and they have profitable businesses. So it's the exact opposite, which is why the Nasdaq's up 33%.
Yeah.
After
being
that's
down,
been the trade, right? Like no one, I definitely didn't figure it out till a couple of weeks ago that it's not just that you have this incredibly widening divergence between companies that have and people that have versus companies and people that don't have. And so all those people saying, oh, 10-year lows for the NASDAQ, small caps relative to the, NASDAQ, it could just be getting started if rates stay up here.
Yeah.
I don't think people understand that. They just, this trend just may be getting started. The real question is, the only question left is, does ETF selling, at what point do people just sell their ETFs? Because most people are hiding out in their S&P and QQQ ETFs, their index ETFs. So the only thing that really hurts the big seven companies with the market cap weighted companies is index selling. And we'll see. I don't know what the trigger
no
could
stock
be.
is immune, as we saw last year when some of the mega caps went down between 30 to 75%. Last year, Tesla was down 75% from 400 to 100, under 100. And then many of the other big caps, received a 50% haircut. So no matter the company, no stock is immune when we are in a bear market. And with interest rates at 5%, and the 10-year yield at 5% and potentially
Mortgages at 8%.
Yeah, mortgage 8%. That's an entirely different subject. What I wanted to show you that yes, the Nasdaq 100 is up 33% so far this year, but they were down 35% last year. So basically, they're still down since early 2021.
Yeah, they're down about 15% still overall. Yeah.
So let's take a look at the 10-year yield. It's kind of tagged 5%, which is levels not seen since 2007, 2007, basically. Definitely uncharted territory for many investors, traders, or many companies that are used to having access to cheap credit This is a completely different market environment. And as Warren Buffett likes to say, interest rates are like gravity for stocks. So higher interest rates do mean lower valuation eventually, not in the short term. So this is something to keep in mind. We're not in the so-called TINA environment where, there's no alternative to stocks because of zero interest rates and negative real interest rates. Now people can get real yield on their money. And anytime people see an increase in volatility in the market, it's very easy just to go to cash and just collect your 5% or whatever you can get.
Well, sophisticated investors like myself included, you can go to private credit, real estate, and get 12 to 15% mortgages, second mezzanine. But first deeds, short-term lending, you can get 8 to 10, and then 12 to 15 the longer you go out. So that's neighborhood type of lending that you can do, or city, in your own hometown. So there's going to be all kinds of different credit opportunities open out as people need to move and need money. So I think stocks have competition right now. That's
Someone
the biggest.
posted a chart, Howard, the other day showing that for the first time in a century, the S&P 500 earnings yield is below what you can get for cash for the first time in 100 years. I mean, that's a pretty
that's interesting.
Significant benchmark.
I didn't know it was that long. Well, that's a major. You can't just say I'm gonna. Yeah, I mean, look at Verizon and AT&T with everybody hiding out for their yield. Yeah, what looks like. Oh, I'll take the risk because I can make 7% on the yield. Well, that's assuming they can now continue to pay that. Again, we like stock markets that have momentum. There is some momentum out there, and it was probably in healthcare, very select healthcare, very select
couple stocks, yeah, basically
military,
yeah.
And the way index works, stocks, there are always going to be stocks going up because money's coming into the market.
Yeah, I mean, you make a good point. So, I mean, up until last week, we had like a small number of momentum stocks that are were holding a little bit better. I mean, a lot better than the market, just going sideways and building bases.
Mm-hmm.
And then coming Wednesday, Thursday, like they were completely crushed as well. I mean, I'm talking about all the cybersecurity names that were holding.
Oh, were they hammered? Yeah.
So well up until like last week. I mean, even they.
That wasn't a leader. They've had all kinds of problems with.
Yeah, I mean, obviously that they have some individual issues that were released on Friday, but the other ones, PA, NW, Palo Alto, and obviously still in an uptrend, but you can still see, some signs of distribution. As I said, no stock is immune, no matter what, during a market correction.
Yeah, from failed moves, and it looked like all-time highs can come some fast moves that could easily drop to the 160s.
Yeah, the crowd and which was the ZS, cyber. Like this was one of the industries that was holding well, and people were commenting that now it could be a new potential leader. But as of right now, as I said, most stocks are under pressure. That doesn't mean that you should short in the whole. I mean, every time you see a stock or an index down multiple days in a row, the market have the tendency to surprise the majority. So I wouldn't be surprised, to see some whipsaw. So it's not that easy. Even on the short side.
Markets really just go straight up and down.
Yeah,
there is an event out there over the weekend and coming in. It's probably related to something we still just don't see. The news is, the war is front page, anti-Semitism is front page, interest rates are front page, Congress being shut down is front page. So maybe any bit of good news is what will surprise people because everybody's looking for more bad news. That said, what a horrific time to have to take risk if you think. Because like you said, the yield on the S&P, it just makes sense to hold, some
I mean,
cash.
if you're an active trader, obviously you can always find an opportunity where you risk $1 to make $3, $5, or $10. But obviously you need to operate on a much shorter time frame, which is not for everyone, obviously.
Yeah, I think the most interesting two charts are Bitcoin and gold.
Yeah, Bitcoin breaking out.
On Bitcoin, government hates it. FTX, scam, high interest rate, all the things that shouldn't help Bitcoin. But now you have turmoil, you have global turmoil, you have money printing going on for war, and you're seeing gold, despite not being the perfect environment for them, just the hint of an improving environment for Bitcoin and gold, and they shot up. Bitcoin above 30K. I added a little bit this weekend, just a small bit to say it's dropped back below 30K, and then gold futures. The gold bugs are out talking about triple tops, whatever. You know what? That's what they're supposed to do, because technically, that is a hell of a looking. That's a hell of a look. If it was Apple, you would be very excited. So gold isn't a growth stock, and there's no cash flow, but a setup is a setup, and macro wise, a setup could be coming into favor, and it's relatively done fantastic considering the macro backdrop for gold, with rising interest rates, and shrinking, and government going, towards shrinking the deficit. Obviously, gold and Bitcoin are saying the opposite's about to happen, and that would be a huge, tailwind for gold and Bitcoin as the proxy for, weak dollar, lower interest rates, increased money supply. So I think those are the two most important charts this weekend.
I mean, the dollar is not that weak, Howard. Obviously, it's.
I said no. I didn't say it. I'm saying the dollar's strong, which you would think gold and Bitcoin wouldn't do well. So something's going to give, is what I'm saying.
Yeah, exactly.
So I'm saying if Bitcoin and gold are going to rally, we may see a big sell-off in the dollar, and which might be good for stocks. So again, like there's a lot going on, and you need to be positioned. I don't know what the next big move is, but it feels like there's a next big move coming. And from a stock perspective, there's not a lot of good setups. So you got to keep an eye here this week.
Yeah, it's mostly gold miners and defense stocks in general, like LMT and Lockheed Martin, NOC, and KTOS, and PAV. Like on the long side, obviously these are not fast movers, and some of them are not super liquid, like this one, Aero Environment. It's not very liquid, but this is where basically these are the names that are holding well. Right now on the long side. Obviously, the new earnings season has just began. We saw Tesla missing estimates, was completely crushed. We saw
Netflix. That was an ugly week. It was really good.
They beat estimates. They were down significantly ahead of earnings, so they definitely surprised the market. Now we have
the only upside surprise, I would say.
Yeah, not in terms of revenue growth, but they show that they have some operating leverage because they beat on earnings, which is always a good muscle to flex, to be able to grow earnings without growing your revenue, which is good because many of those big companies have that opportunity to cut costs, and many of them have been doing that in the past.
Yeah, let's see in a week. A lot of these then have reversed. If it closes below 340, it's a trap. But if it can hang out here for a little while the market finds its legs, that'd be a good sign. But a lot of people are betting against these things and getting squeezed, so there's not much you can tell. Schwab's initial reaction was up and then closed at the lows of the week.
All the financials, Howard, every single one of them, they beat estimates and they sold off.
Canadian banks, which I don't know the symbol, all are in a breakdown mode, and those are kind of the global strongest banks. But Canada's just such a fucking mess from a leadership perspective, from interest rate perspective, from just everybody crowded into the 5 big banks of Canada.
With them having so many gold and oil stocks.
Yeah. Anyways, I think next week we'll have a lot more.
I mean, we have some really big earnings reports: Google, Meta, and Microsoft, and I don't know, something else.
Yeah.
Pretty big weeks for earnings. But in general, I think for most people, it just makes sense to do less, trade small if you have to,
Yeah.
and preserve capital and confidence. I think
Yep.
it's good.
Next bull market is coming, but it ain't this. This is not what a bull market looks like right now. And forgetting about the percentages in this, just a lot of weak sectors. And in the end, you keep your capital to participate in up markets, and it's thin. It's thin. There is stocks participating, but very thin. And if you're going to invest, you got to go with what, profitable businesses and really good setups is really what you got to be focused on unless you're a nimble trader. Okay, buddy, have a great week. Everybody
All
have
right,
a
you
great
too,
week.
Howard. See you next week.